For XRP, this week is a significant day. Many investors are curious about the implications of the upcoming debut of the new 21 share spot XRP ETF, how much XRP these funds will absorb, and how this will affect the market as more institutions get access to regulated XRP products. With this latest addition, there are now 5 distinct spot XRP ETFs competing simultaneously in the market, making it one of the most competitive settings XRP has ever encountered. In addition, Ripple has disclosed further information regarding the XRP ledger. On-chain data indicates that the XRP exchange supply is tightening at a record rate, and Japan's carry trade is starting to wind down. Let's go over everything in detail because there is a lot going on. Analysts predict that next week will be the first full week in which all 5 spot XRP ETFs function simultaneously, providing us with the most accurate picture to date of the daily requirements for XRP institutional funds. According to preliminary estimates, the daily baseline demand is close to 75 million XRP. Meanwhile, 300 million XRP from escrow re-enters the market every 30 days, and the exchange supply has decreased to about 2.7 billion XRP. Using models of elasticity between 0.02 and 0.0505 during a 180-day span. While stronger elasticity could lead to swift, violent price spikes, analysts caution that lower elasticity could rapidly deplete the exchange supply. OTC desks, meanwhile, are already silently taking in liquidity. Under the symbol XR, the new 21-share XRP ETF will trade on the CBOE BZX platform. Since it is a physically backed ETF, actual XRP rather than derivatives is held in it. It will use conventional creation and redemption procedures, employing Anchorage and BitGo for custody, and track the CMECF XRPUSD reference rate. A management fee of about 0.5%. This new ETF is especially made for U.S. institutions who favor SEC-registered American-listed assets, even though 21 shares already runs an XRP ETP in Europe with a far higher cost structure. It opens alongside prominent firms like Franklin Templeton and Grayscale, which have already drawn inflows of around $700 million in less than a month. For the first time, the market will see a clear picture of the actual daily demand for XRP when all 5 ETFs trade at the same time. Nearly 29% of the XRP that was formerly held on centralized exchanges has already departed in recent weeks, according to on-chain data. Even before the newest ETF launches, this outflow shows a tightening supply situation and is in perfect alignment with ETF approvals. The price impact could be catastrophic if OTC desks finally run out of private reserves and have to buy from the open market. A steady daily demand of 50 to 100 million XRP would easily break through exchange order books, eliminating sell walls and establishing the prerequisites for a sharp increase in price. With its new stablecoin, RLUSD, denominated in US dollars, surpassing $1 billion in market capitalization on Ethereum, Ripple's influence is growing. This amounts to over 40%, increase in just 1 month, making it one of the stablecoins with the quickest rate of growth in the market. Executives at Ripple stress that this momentum is just the start. By enhancing compliance tools and growing the infrastructure for decentralized banking, Ripple hopes to increase the amount of real-world financial volume on the XRP ledger, according to Jas Cooper, head of product for Ripple-X. According to her, DeFi should be viewed as a whole reconstruction of financial institutions on blockchain rails, with cross-border settlements and stable coin payments emerging as the main use cases on the XRP ledger, rather than just speculative trading. Self-custody alternatives such as the Zoom wallet and the Descent biometric wallet are in high demand as awareness rises. Thousands of consumers have already increased their protection thanks to Descent's biggest deal of the year. These wallets offer features like cross-chain swaps, native dApps, fingerprint technology, and market data, and they support thousands of cryptocurrencies, including XRP. Many consumers are moving away from holding cryptocurrency on exchanges as self-custody becomes increasingly crucial in an environment where liquidity is becoming more scarce. There has been some misunderstanding in the XRP community about whether private and 2 distinct XRP values could result from public XRP ledgers. According to experts, this is not feasible. Because assets can transfer between different networks via bridges or custodial mechanisms, the XRP ledger's private and public versions ultimately rely on the same XRP for settlement. Arbitrage guarantees a single worldwide pricing. A distinct wrapped token or internal instrument that isn't real XRP is the only way a different price could exist. Consequently, organizations that need liquidity will always require XRP from the open market, and public holders, regardless of how private ledgers operate, have the same pricing structure. The XLS38 paradigm is used by the sidechains on the XRP ledger, in which XRP is issued as wrapped XRP on the sidechain and locked on the mainnet. The original XRP unlocks when the wrapped XRP is burned. This implies that the entire supply is always tied to the main ledger, and that additional XRP must be locked away in order for the ecosystem to expand. The demand for XRP will rise as more institutions implement private or sidechain deployments, further constricting supply and creating pricing pressure on the primary market. The engineering teams at Ripple are still working on complete EVM-compatible sidechains, which are getting close to mainnet readiness after years of testing. Global financial changes, meantime, are quickening. There are indications that Japan's well-known carry trade, which enables traders to borrow Japanese yen at incredibly low interest rates and invest in foreign assets with higher yields, is coming to an end. Investors made enormous profits for decades by borrowing yen at almost zero interest and reinvesting it in currencies with yields ranging from 5 to 10%. Carry trades, however, are only profitable when the yen remains weak. A sharp increase in the value of the yen might eliminate profits or produce enormous losses, compelling traders to quickly unwind their investments. Stock, currency, and cryptocurrency markets may see volatility as Japan announces possible changes to long-standing policy. The XRP supply shock intensifies in the midst of these macroeconomic forces. Since December, exchange balances have dropped by an astounding 45% in just 60 days, from 3.9 billion to 2.6 billion XRP. This is the biggest drop in years, and it comes just as demand for ETFs is starting to pick up speed. With credit card debt in the United States, with XRP positioned as a potential bridge for cross-border settlement and liquidity, many investors believe blockchain assets will become crucial infrastructure during any financial reset, with global markets displaying indications of strain and approaching $1.23 trillion. Lastly, the trajectory of the entire cryptocurrency market could be influenced by how well Bitcoin does in December. Bitcoin has lost money at the end of December in 3 of the last 4 years. The entire market, including XRP, might rise if Bitcoin increases this month. The majority of altcoins will probably follow if it drops. However, many think XRP comes into this time with better fundamentals than ever before because of the momentum of ETFs tightening supply, adoption of private ledgers, and growing real-world value. We appreciate you listening and keeping yourself updated. Your assistance is crucial, and it is truly an honor to accompany you on this trip. Please feel free to like, comment, or share the analysis with others who might find it useful. Right now, the future of digital money is taking shape, and together, we'll keep an eye on every advancement that molds this new period.